Christina, aka the Lady Boss K on Instagram, and today we'll be discussing the difference between binary options and traditional Forex. But before we even explain all of that, you must know what Forex is. So Forex stands for the foreign exchange market, and what we do is trade currencies within this market, right? So, for example, if we were to go to Mexico, we would have to trade in our United States dollar for the Mexican peso, right? And within that exchange, we would actually receive more money than we gave because the value of the United States dollar is actually higher than the value of the Mexican peso, right? So, when we're looking at this chart, I aligned it so that everything could be side by side, right? So, when it comes to traditional Forex, you're usually trading off a lot size, 0.01, which is 10 cents per pip. As we see, we trade pips, 0.01 per pip, or 0.1 per pip, which is $1, or 1.0 per pip, which is $10, right? So, instead of doing that lot size, the whole lot size thing, in binary options, you're actually doing time expiration. So, you choose which time you want, which is about 30 seconds to whatever other time, like really, but usually we do 30 seconds to 15 minutes. That's usually how long it takes to trade. So instead of setting a 0.01, aka 10 cents per pip, we will actually be doing 30 seconds instead, right? So that 30-second expiration time also connects with the stop loss and the take profit that you will use in traditional Forex. So when you have a stop loss, you're stopping the amount that is taken out of your account when you're losing a trade, right? And when you have a take profit, that's when you win your trade, right? So instead of setting a stop loss and a take profit, you actually determine how much money you want to put into the market. So as we see here, it says percentage payout. So a percentage payout is telling you how much you're going to get from that trade if you win, right? A percentage payout is, okay, let's say you put $10 in, right? Instead of a lot size, we're putting in a certain amount. So $10. And at 70%, okay, let's say they had 70% as a percentage payout, right? They have 70% for a percentage payout, and you're putting in $10. So 70% of $10 is what? $7. So if you win the trade, you will actually be getting your 10 back that you put in plus $7 because that's the percent payout, right? Instead of waiting for a stop loss or a take profit. And if you lose your trade, you just lose your whole $10. As I mentioned before, you'll be trading off of micro pips within the binary options field of Forex, right? Instead of a pip. So as we know, the pip is the fourth decimal number out of most pairs or crosses, right? And the micro pip is the fifth. So instead of waiting for the fourth, we'll be waiting for the fifth to hit to determine how we're going to trade. When it comes to the speed, binary options is definitely quicker. As I said, it's 30 seconds instead of a stop loss or a take profit. Sometimes it hits like this, and sometimes it don't hit till the next day, and you have to pay an extra 7 cents to continue to stay in that trade, right? Depending on your broker, you know, KLC Forex and Hugo's Way, I think it's like 7 cents or something. Yeah, but yes. So at the bottom, I don't know if y'all can see it. I tried to adjust it so that y'all can see everything on the chart, but it says less analysis on the binary option side. So when it comes to analysis with traditional Forex, you're actually drawing a whole bunch of lines and analyzing the chart a little longer than you would when it comes to binary options, right? Because in binary options, it just moves up and down, and it's actually pretty visible, even though it's best to use the apps that we have in the academy to determine when to buy or sell, but it's pretty visible to tell when you should buy or sell within the market. It's less analysis because you don't have to draw all the lines, and you don't have to wait for a head and shoulders formation to, for example, to form, or a bullish pendant or something like that. So yeah, those are the main differences between traditional Forex and binary options. When it comes to me, I was actually trading binary options this morning. The HFX package has that, and the Elite. The Elite has both of these. You already know how we feel about the Elite. The Elite is A1. But yes, in traditional Forex is, you know, they have, what is it called? The harmonic scanner instead of the Liberty app. But either way, it's really cool. It's really fine. If you're not really ready to advance to binary options, talk to someone who already does binary options on your team. If anybody in your team does it, do a little research, see if you really want to switch over to that package. But in my recommendation, I would either have the Elite or HFX. I have HFX because it's faster, it's funner, it's easier. And if you know Millie Mills, you already know the vibe. Let's go! go. Let's go, you guys. So yeah, those are the main differences. Like I said, I would recommend binary options trading over traditional Forex. But either way, you could really do both. Because after you learn the skill and you really know how to do technical analysis for traditional Forex, you can do that if you want to. But if you're ready for that quicker money, because y'all already know Forex is quick either way. But if you're ready for that quicker money, I would definitely recommend binary options. So thank you guys for tuning in. I appreciate it. I'll see y'all next video. This is just real quick, real smooth explanation. If y'all have any questions, I already know the vibes. Hit me up. Follow me on Instagram at TheLadyBossK. Same as my YouTube channel. And if you have any comments, drop it in the comment section. Thank you guys for watching, and I'll see y'all next time.